All right, how's everyone doing? This is Hala Pablo. Thank you for tuning in. Appreciate you guys. Let's look at Bitcoin real quick. I don't want to keep you long. I've got some things I want to just explain and try to get in and out as quickly as possible here. Okay, so we've got Bitcoin on the fractals here, on the 4-year cycle, on the 2022 and 2025. I've got the features here a little bit more labeled as far as like Wyckoff and the geometric shapes, just as a kind of just to guide those who maybe aren't familiar with these sort of patterns here. This is a 4-year cycle. This is subcycle A, subcycle B of 2022, and this is actually 2021. 2022 came in around during this sell-off. This is when this area transitioned into 2022, but all of this prior to I would say the first LPSY after the UTAD is all 2021. And so here we are now at the cusp of 2026, at, more or less about a month away from 2026. So, but we're still in 2025 as we were still in 2021 here. So it is roughly 4 years. Okay. And so we have subcycle A, subcycle B of 2022, subcycle A, subcycle B of 2025, and you see a lot of the features coincide with each other. We have this this ending diagonal here of subcycle A, ending diagonal with the buying climax, UT, and up thrust after distribution, and then we came down here, we broke structure, and we had a failure to re-enter the structure here, failure to re-enter, and then the steep sell-off. If you remember, we tracked this thing all early this year. We didn't have the 400 simple moving average down here though. If I had had the 400 simple moving average, and that was me, that's my bad, if I had the 400 simple moving average, then we would have called this bottom beautifully, and boy, what a long we would have had, right? But anyway, we have the 400 now, and so we're going to just learn from our folly and continue on driving on. So anyway, we had this spring, we had this here, this accumulation range. You see the similarities with the spring on both, bouncing off the 400 simple moving average, coming up and creating subcycle B with another head and shoulders kind of pattern here. We had the left shoulder, head, right shoulder. The UTAD here, the all-time high, which occurred back in November of 21, capped out at around 68 Gs, and then we had the two LPSYs. Notice these two LPSYs here, same as, correspond with today's fractal. We had the second LPSY occurring right above the anchored VWAP here. The anchored VWAP, of course, is anchored to the spring of the accumulation range, or the inverted head between these two cycle tops. And so it's occurring at roughly the same place, and also in relation to the 400 simple moving average, snaking all the way up. The difference is here on this shoulder area came down this year and actually bounced off the anchored VWAP, or in this case the creek line, whereas 4 years ago it went beneath it, but it didn't stay there long. It came back up, and so because it was buoyant, it was bullishly biased, and so the wave trajectories more or less replicated each other. Remember, I told you the 4-year cycles aren't going to be exactly the same, just like no 4 years or no seasons are exactly the same. The winter that we had last year isn't the same winter we're going to have this year. Some of the days are going to be colder than others, but nevertheless, it's winter in a macro sense. It is winter, and so we're looking at the macro. I want to try to emphasize that, because some people get derailed by that. It's not exactly the same, and I thought it wasn't going to go down. Well, there's a thing called liquidity, and liquidity raids and liquidity sweeps, and so you can never really forecast each wave, the breadth of it, or the depth or the height of it, but you can kind of prognosticate. If you go off the fractals, and the fractals haven't been invalidated, you can go off the general macro movement of it, and then get into the forensics. You can kind of measure out the VSA and figure out how far it's going to go up or down. But we don't look at this when we're looking at the macro fractals. We're looking at the general trajectory. So we see that here it came down slightly beneath the ice here, and then it came back up over the creek, and then whereas here we didn't go down at all. And then also here we had kind of like a smooth classical double top here with the UTAD, what I call sometimes horns of the devil here, in 2022. It was textbook, right? Whereas here is more linear, it's more played out. With the buying climax, we had the automatic rally secondary test, sign of weakness, and then we didn't have an upthrust that came up above the secondary test. Instead, we had another kind of low here, but slightly higher, and then we had the UTAD, and that was a sell-off, and this was the most current 25 Gs. And then the two LPSYs going beneath the ice here, and we have the mitigation along the, as you can see, along the 400 simple moving average. We kind of have a mitigation here as well. And then since then we've ducked under where we currently sit. So if we look at 2022, we can go ahead and play the bars to see what transpired after it. I'm sure many of you know. Unless you've been living under a rock, you know what's happened. Now notice that we've had some rallyings after this. So if we have rallies, I don't want you to be the Thanksgiving Day turkey for the composite operator. Notice here that the rallies, see, here's another one. These rallies are capping out beneath the 400 Iron Dome here. We're trying to get back up. Once we go under the 400 simple moving average, it is very, very difficult to get back up, historically, and we'll look at that. You see how we kind of did it here, and and was unable to prevail, and back down we went. And if we go ahead and, so that's the 400, if we include the 200, this is the 200 simple day moving average. Notice that they're getting very, very close, very narrow. They're kind of joining together here, and they become as one. And then from there, the 200, here, I'll keep playing it. The 200 ducks beneath the 400, and that's when we have the death cross, right? So what can we learn from this? So we had several attempts at the 400, and 1, 2, 3 attempts. The third one touched actually the 200. The 200 came down. If we go ahead and do the 200 for today, we'll see where we are. The 200 is still pretty high up here, above the second LPSY, but it is beginning to turn down, as you can see, this kind of trajectory here, over this LPSY coming down. So we want to keep our eyes on that, especially if we start rallying in the price action up back to test the 400, and the 200 is coming down to meet us as we do it. Here, this last kind of launch hit the 4 and the 200, but that was it. And from there, it was curtains. So if 2025 is going to continue to step in line with 2022, then expect some liquidity runs in these next few days or weeks as we get nearer and nearer to Christmas and the New Year. Expect to see 1, 2, 3, maybe more. Again, we don't know the severity of what the winter days are going to be like. We just know it's going to be winter, right? So we don't know. We could have an ice storm, or it could be a mild winter, and we can go right into spring. One thing we do know, that we will have a winter, and the winter will eventually transition into spring. So we just have to ride it out day by day by day, and that's where the forensics come in. So we'll look at the forensics also. So this isn't a forensic chart. This is a what is this? This is the Bitcoin on a daily price action with the 200 and the 400, and then beneath here I have the short-term holder net unrealized profit and loss chart, otherwise known as the NUPL. And so the NUPL is really interesting because it's a very strong indicator of buyer-seller sentiment, and historically it has marked out the tops and the bottoms with a great degree of accuracy, almost as good as my favorite, the cumulative value days destroyed, which we'll look at in a moment. But here we see the pocket between the 2 and the 4 on the macro. You see, notice that it hasn't gone in this entire bull run. The price hasn't gone, it's gone into the pocket between the 2 and the 4, but it hasn't gone beneath the 4. But the last time it went beneath the 4 was here, back in the 4-year cycle. This was the fractal that we're scrutinizing, that we just scrutinized on those two charts there. And this is when it went under the 4. So it didn't go under here where the valley was. and it had the inverted head and shoulders, but here it did go down. And so this is why our attention should be peaked to these fractal accumulation ranges. Well, this actually proved to be a redistribution, not an accumulation, but right now we don't know. We're assuming that, I know many of us are hoping that it's an accumulation. If it's an accumulation, in order for this to be an accumulation, we've got to come back up over the 400. We've got to get back over. See, now this had not been rejected off the third bounce, and had instead gone through it and came back down, retested and established support here, and then went up through the 200, and it made this ice barrier into a creek. It melted this creek area and came up. Then we wouldn't be having this kind of discussion today, and this would have been a terminal shakeout. So, but that's not what happened historically in this fractal cycle. Instead, we had the sell-off. So this is what we're looking for. And so we go down here in the Nupal and we look and we see that yes, we've crossed beneath the midline. This zero line here is very, very strong. This yellow line here, and so this is what's called the midline or the zero line, and everything under this line is considered oversold. But here's the thing: we have a smooth moving average that alternates between yellow and red. And so when we are underneath the midline and we have a red smoothing average and we have a red trend line here, then that usually indicates that there is a predominance in the selling power, and we may be down under here for a spell until this red line here changes trajectory and starts coming back upward to meet the smooth moving average, which is going in the same direction. We kind of saw this here. Now, if we look at the Nupal, going back to this is the fractal that we're interested in. We had a double red underneath the zero line going in the same direction, but then it came back up. Remember, these are these liquidity drives here coming up, but notice that the red trend line here never actually came back up above the zero line. So this is what we're going to be looking at as well. I do expect this large Nupal line here, the red line, the large red line, to begin to swing or veer back upward. That's okay. It doesn't mean that we're out of the haunted forest. It just means that we're making another attempt at the 400 simple moving average, like we already looked at, which now is running in line, which is running parallel with this midline, or with the zero line on the Nupal. Let's go now to here's the cumulative value days destroyed. So we're going to keep an eye on both of those charts. Here we've already looked at, we see the bearish divergence between the CVDD and the price action. We've gone over this many times in many videos, and so coming out of a bearish divergence, ducking under the 400 historically has been a voyage towards a potential death cross. And so we haven't gotten the death cross yet, but we have crossed into and we have entered into this rectangle or this zone here. Now this zone, the price action has gone into here. We bounced off it, and this, we're going back to the fractal in 2022. The 400 is above here. This is the 400. Let's see if I could draw it out for you, because it doesn't show it on this chart. I'm kind of going fast. I hope everyone is able to follow this. I know it's just my brain getting so far ahead of me, but here's the 400 right here. Boom. Okay, so we're coming back up now. Notice, this is what I want you to see, because I made a little note here because I wanted to remind myself to make sure that this has been inculcated in some of y'all's brains, some of you that follow these videos, especially if you're starting to use these two charts in tandem like I do, like the cumulative value days destroyed. Entering this rectangle is not evidence of a death golden cross. So just because we entered into here doesn't mean that we're going to keep going down. Now, if we follow the fractal, then eventually we will, right? But the fractal, as you know, may be invalidated. So what is the real litmus test of a continuation of a macro trend, if we're using these two charts in conjunction with each other? It is the retest, that is whether or not we go back into it after coming in. If we go through it, see, like, look here, we went through it. we came back up, we had these liquidity sweeps, but then it was curtains, right? Then it was death coming down after this mark all the way up here. And here was the token of death. We went through this triangle here, this rectangle, and then we tried to come up back into it. See how it tried to re-enter here and it was unable to? It got rejected. That was the death cross. That corresponded to this area, which came after this rejection of the 400 and the 200 simple moving averages. There was a rejection, but if you look at the price action, and this is why it's important to use these two in tandem, because if you look at the price action, the candles, the Japanese candles, didn't come up and retouch or even come really close to the 200 and the 400, even though the 200 had already ducked down beneath the 400, signifying the death cross. But we have like the double confirmation if we shift to the cumulative value days destroyed, and we see that this, now the chart, the waves on the chart, this isn't price action, this is just long-term HODL positions being moved. This basically reflects the translocation of long-term HODLed crypto. And so here we see that that smart money is selling off more beneath this area here. And so this confirms the death cross. And then of course we had this deep bottom over here. Okay. And in the same way, we came back up, we re-entered this how do we know that this isn't just like a false rally and we're going to go back down and make another macro bottom? Well, it's because we entered into the elongated rectangle and we came back down out of it. Now notice we came out of it and then back into it, and this time we were able to re-enter, and that coincided precisely with the golden cross. And so we had the golden cross here in the price action. So we had the double confirmation on the cumulative value days destroyed and the traditional price action chart. And then this kicked off the entire bull macro market of starting in 2023 to where we are, culminating in where we are now. Another bearish divergence. We have rising highs in the macro top, subcycle A and subcycle B, but then we have subcycle A and subcycle B in the cumulative value days destroyed on a decline. So that's a bearish divergence. And then we've gone under the 400 and we've entered into this rectangular zone. So if we're going to have a repeat, if we're going to continue on as we've been, then expect those liquidity sweeps. These are those liquidity sweeps, and also the CBDD should also go up with it, but not able to prevail through the 400. Now, if we go up through the 400, establish it as support, remember we talked about this, then all of this is invalidated. But if we get stopped out beneath the iron dome of the 400 and the 200, and we start doing this, and we come back down into the CBDD zone here and go even through it, underneath it that is, and then try to get back up into it but fail, then and only then should we can have just a confirmation in our macro bearish bias and count on, because by then we'll have the confirmation of the death cross. So all right. Man, a lot of information, right? All right, and so let's look at some news here, and then I'm going to let you all go. Market shows signs of relief after a large sell-off. This is today. Signal is pointing upward, oversold conditions. Analysts expect BTC to trade between 82 and 92 for now. Bitcoin currently has a strong support area near the 78. Okay, so this guy is saying we have a strong support. You know what the 78 is, man? This area here. This is basically the 78. So yeah, as long as we bounce and we see that we've eventually we're going to come back into this, I believe. This I made another video. I said, well, we're going to revisit the lows. I think it was like 2 videos ago. Bitcoin is going to revisit its lows, and when it falls back into this area here, which is the mitigation point for the spring of this accumulation range that we had. Remember we talked about this in the beginning of the video that bounced off the 400 simple moving average. This whole area has been mitigated and should be mitigated, and so I'm expecting a mitigation eventually of this spring area, but perhaps not before. Like I said, like some upward action here, but liquidity sweeps as the 200 comes back down like this. So I entitled this video "Don't Be the Turkey." Basically, retail buyers are the turkey for the composite operator, the Thanksgiving Day turkey. So don't be the prey. Don't be turkey for the for the market maker and for the whales. Okay, if you see it coming up, yeah, ride it up. You know, if you want to like swing trade some of these sweeps and all that, you could do it. But I would not linger long back up here close to the 400 if we do touch it. But you can certainly make money doing it, and especially after several attempts. And keeping your eye on the CVDD and on the other charts that we looked at, the STH Nupal, using all those in tandem, I would be very, very careful. It's a very precarious situation to be up here, especially with the 200 and the 400 when they begin to converge, which it looks like they're going to do if we keep on keeping on in the same trajectory that we've been going off of for the past month now or so. So anyway, that's all I've got. If you got anything out of these videos, like, subscribe. I try to keep it as real as possible. I try to call it as it is. I'm not a perma bear. I'm not a perma bull, though some people think I'm a perma bear. That's just the nature of, you know, Bitcoin. Bitcoin goes up, it's thrilling, but then it comes down, and the down periods can be long and drawn out, and that's for a reason. They want to bore you to death. They want you to lose hope. They want you to lose faith. Smart money wants dumb money to just finally, you know, dumb money has like the trader's version of, you know, ADHD. They can't, you know, they always got to be doing something, always got to be trading something, and so when we see these periods of, we don't know if they're consolidation, we don't know if it's accumulation or distribution or whatnot, and you know, dumb money begins to get antsy, and so they like to draw it out with the end game of just finally capitulating and like panic selling and getting out. So that's what all of these things are devised to do. But if you follow the fractals, you know, you can kind of have a heads up, you kind of have an advantage in the game as long as the fractals remain validated. So with that, I'm going to let you all go. Hopefully you got something out of this. Like I said, subscribe. I really appreciate it. If you like to take your trading up even higher and kind of like learn how to do some of this stuff, how to read some of these charts, kind of get some of my ideas, I do have an option. I do have a private Discord trading group. I keep it extremely affordable. It's like 25 bucks a month or something like that. And I get in there when I can, and I share, and then you can send me texts, and I'll try to answer them. And you know, just be in there until you can like adopt or kind of assimilate some of these different strategies into your own and make your own system. You know, that's what it's all about. Just, you know, adding and learning, and you know, hold fast to that which is good, and discard, you know, eat the meat, and you know, spit out the bones. You know, so if any of this can be meat for you, then you're more than welcome. If not, you can certainly glean and prosper and learn much just by watching these videos, these long-winded videos. Man, I'm sorry. So I'm going to let you go now. I wanted this to be short and sweet, but it's gone on. But thanks a lot. None of what you've seen here, heard here, I'm not a financial advisor. It's for educational use only, but you already knew that. May God richly bless you. If I don't see you, have a wonderful Thanksgiving. Don't be the turkey, all right, guys? All right, man. Love you in Christ. Take care. Bye-bye.